Guys, welcome to Tech Bros. Deeply appreciate everyone taking the time out of the valuable time out of their life. Because we're talking about life at the end of the day. So the time you spend with people, quite frankly, dictates the relationships and the basis for humanity. Honestly, it's the existential reality for how we understand existence. And I am so sorry that Tanner ended up wasting everybody's time. And decided, I really wish this guy would give a crap about people's time. I really.
Oh God.
The bricks are real and Tanner's late.
I literally have a DM. I'm going to start exposing DMs here because I literally said at 9:31 that I'm backstage and waiting.
9:31.
No. I was here on time. I was surprised that it ticked into being late.
You guys see that? Tanner, I know you're from Canada, but can you read time? 9:31. We start at 9:30.
Yes, but I was not expecting you to be late, sir. I was here for multiple minutes at that point, and then I saved your ass by telling you that we had a show. Okay, he was power napping at his desk.
I don't know why you're gaslighting everybody. I really don't think that's the right.
We all know who made us late, so
we all know.
Roy, tell the truth.
I already did.
You already did.
There's two axioms. There's two axioms that you can always count on. One is the bricks are real, and the second is Tanner is late.
Your mic's also decently quiet, by the way, Roy.
Is this better?
Yeah,
it's definitely better.
This is better too.
Yeah, I think your gain was probably just lower.
Yeah, I can turn it up over here too. Is this too loud?
Don't call me Tantrum Tanner. I can't believe these names come out of nowhere, bro.
Okay, guys, in all reality, it definitely was my fault. I was doing like a million things, and I was like, oh, crap, it's 9:31. But the fact that he texted, I actually didn't, your text didn't trigger me remembering. I just saw the time, and I remembered. But the fact that you texted 9:31 means you didn't text at 9:28. Okay, buddy? Texted at 9:30.
Well, I was backstage at 9:28, so.
Well, you texted at 9:31. So
yeah, but you wouldn't know it regardless.
All right, we got a lot to talk about. Thank you, everybody, for being here for another week of Tech Bros. I think we missed last week because, it was Diwali, so I couldn't make it last week. But we are back, and I think let's get started off with raw thoughts on the market. We got SoFi earnings tomorrow. We'll talk about that. Got some hood updates, some NVIDIA stuff. But, Roy, we'll start with you. S&P, all-time highs. How are you feeling?
Yeah, I mentioned this in your birthday stream.
Okay, Roy, that's a little too. Yeah.
Okay. How's it? Is it better?
Put my speakers away.
That's better.
Good?
Yes.
It's okay? All right.
Yes.
Sorry, I don't know what happened to the setting. Like, nothing changed. We just had a power outage, and it just knocked everything out. So, okay. It is shocking to me, and I pointed this out with you earlier, that we are at all-time highs in the fear and greed index. I'll throw this up here, or I'll ask you to throw it up, is at fear. Now, this can move and probably will move to neutral and then to greed, if we continue moving up. But in an uptrend, it's not too uncommon to see, be an extreme fear for a little while. But at all-time highs, it's a little bit surprising. Of course, there's real catalysts. The tariff stuff is a big thing. I do feel like that the market might be ignoring, overlooking some potential near-term pain, specifically with the government shutdown, SNAP benefits, student loans, and that sort of thing too. But it's a fun day. A lot of these companies too that are getting the bids are massive companies posting good earnings today. This week, Tanner pointed out, Steph Guild also did on Robinhood too, that 40-something% of companies in the S&P 500 are reporting earnings this week. So, did I get that right, Tanner?
It might be that high. I was just saying that it was 24% in just the 5 companies. I didn't even look at all the other companies that are reporting. It probably is 40%.
Let me find that. Yeah, 42% of S&P companies by market cap reporting earnings. So it's by market cap, not by number of companies. So I missed that part. But this ultimately, there will always be, the roller coaster still in effect. But this week really is what determines how good earnings actually are, with 42% S&P 500. If the narrative is like, hey, they're crushing it, their AI is real, which we'll hear that again, of course. Companies are growing, no real concerns with consumers. The company here and there will try to blame that. But when you're in isolation, the market just ignores you and says, you're terrible. we're going to actually believe these companies that are killing it. And I expect that's probably what we're going to get. So we may continue on a uptrend and rally all the way through Santa Claus time.
So before you speak, Tanner, I'm going to give my quick thoughts on this. I think there's 3 elements of what's going on right now. Number 1, you have rate cuts coming up on Wednesday. Number 2, you have earnings on Wednesday, Microsoft, Meta, Google, then Apple and Amazon on Thursday. I think all those companies hopefully crush and continue the trend to show that we should be trading at the multiples we're trading at. So those are 2 really important things. And then number 3, which I think is something that it really is important to double down on, and I'm curious on your thoughts on this as well, guys. We had a 3% drawdown. And that 3% drawdown was the first drawdown in 5 months. I think all of us can say we needed it. And maybe it was because of the Trump China tweets or whatever it was, crypto leverage, but we needed it. Like August and September, we avoided barely even a 1% drawdown. And so you needed to get a little bit of froth out of the system. A lot of the names that were running to $30, $40 billion market caps that are not delivering any earnings growth, any even revenue, forget earnings, they ended up getting hit. Now, they didn't get hit to the point where they're going to 0, and I don't think they're going to 0, but they did get hit. I mean, for goodness sakes, we had a meme stock ETF come back before we had this 3% drawdown over the past couple of weeks. Last time that happened was literally the top in 2021. So I think there was a lot of uneasiness over the past couple of weeks from a lot of people around, hey, this feels frothy. Are we topping? Is there too much euphoria? Is there too much excitement? And all of that got wiped out over the past couple of weeks. Now, you still have companies trading at pretty aggressive multiples, and I think the stock market's very rewarding if you put up the growth to expand your multiple, and it's very gut-wrenching if you can't put up the growth. But I don't think it's a clown market the way it was a couple weeks ago where things were just going up for the hell of going up. And I think that, along with the fact that the S&P is back to all-time highs in a pretty steady way, you've got rate cuts coming, you've got earnings growth, hopefully from big tech coming this week, and you've got some of that froth shaken out. I think this is one of the more healthier markets we've been in all of 2025. And I'm curious on your thoughts on that as well.
No, I think you summarized that well. I mean, I think I feel very confident in the position that we're in. I like the trade deals that are coming through. I don't think that anyone, any of the large market movers are here to blow up, the S&P 500 right now. So everyone wants to get deals done. They want good economies. There's no, there's always a war brewing for sure, but there's no real looming events that I think is going to draw anything down globally right now. Obviously, things can change very quickly, but rate cuts are going to help. The continued rate cuts, even talk about an additional rate cut in 2026, is something for a lot of loan book purchasers, especially. We'll talk about SoFi, but that's very exciting going forward, that this is not just going to be, one rate cut that we're talking about. This is potentially 3 more, 2 this year, but continuing into 2026. That's a very exciting ordeal that's happening.
And then you got the Chinese that are de-escalating with the U.S., right?
Yeah.
Roy, go ahead.
No, I mean, I agree with you guys. Like, these are real catalysts. The companies that are healthy and growing continue to do well. There are, there's cracks, and you can always point. And if you look hard enough, you can find bearish things. Bears always manage to do that. Amazon layoffs is not happy news for anybody that's affected. But I mean, the reality is they've done similar layoffs over the last 2, or this will be the 3rd time in the last 4 years. So, I think that the earnings season is going to be the same as what we've seen the last few quarters, with everything's healthy. We already saw banks report. Consumers seem like they're in a healthy place, except with some very isolated. Maybe there's, Jamie Dimon said that there might be, when you see one cockroach, that there's probably more, but I don't know how many more we see, at least this earnings. I think that might be something that waits until next year, after the Christmas season and holiday spend. But yeah.
And my understanding is the 2, regional banks that ended up seeing problems also were both tied to the same company that was doing fraudulent actions. I don't remember the name of the business. Maybe Amit will, but it might be an isolated issue. It might not be a cockroach situation at all.
Yeah, I think. Go ahead, Roy.
I was going to say Dimon is pretty bearish in a lot of his comments. I think banker CEOs maybe are, just by nature, but
yeah, they have to be cautious, right? It's risk aversion.
Yeah.
I don't remember the exact name of the companies, but I do agree that I think it's isolated. I mean, every other regional that reported after that Zion and Western Alliance report, which by the way, when Zion, that wasn't even Zion's earnings. That was just like a preliminary thing they had to put out there. Their earnings crushed. And their provision for credit losses, which is what determines kind of how healthy the consumer is, how healthy your loans are. I mean, all these regionals came in better than expected by like almost $100 to $150 million. So the private credit fears don't seem to be that aggressive. And maybe they will be, but we don't have that much evidence yet to say that they're super aggressive. The China stuff seems like it's starting to get relaxed. A lot of froth, although it's still in the market, has been taken out, which I think people are feeling a bit more healthy about. Earnings growth is here. And then you've got rate cuts. I mean, I agree with Roy. There's definitely things to be bearish about, like the labor market and potential cracks in the economy with the lower end of the consumer. But on a broader macro trend, I don't see the massive bear case. And then you have $7.5 trillion on the sidelines, which inevitably is going to want to find a home.
What are we seeing for end of year S&P 500 price targets?
See, what was Tom Lee's?
You know, actually, people now it's 7,000, but originally in January it was 6,600.
Yeah.
So they raised it going into the end of the year, but originally he was not, bulled up to 7,000. There's only a couple people that were bulled up to that level. Well, I don't know, but we're less than 2% away from 7,000, so I don't think it's crazy.
Yeah.
His comments on Friday was pretty interesting. He said 7,000 is what he thinks by end of year, because there's usually a 4% average move in November and December. But the amount of times that the Federal Reserve has began to cut rates in the year by September or later usually has that end point of the year actually closer to about a 10% run. It's only happened twice in the last 50 years. So he actually thinks we could be as high as a 10% additional move, or putting the year to date or full year 2025 move on the S&P 500 of around 27%. If that happens, like, this is an all-time bull market. I mean, that's a 2019 run of the last decade. Only 2019 has done better than that at 28%. That's doing better than 2021. But also that puts us at 7,400 and something.
Yeah.
Yeah, I don't know that we get there. There's not really a lot of time left. And there might be a little bit of chop, but I mean, it wouldn't be too shocking at this point. Like next year, definitely. Yeah, it seems like it could be, as long as the bull market macro is intact. But yeah, I think 7,000 is. I mean, nothing's guaranteed, but it feels like 7,000 is inevitable at this point.
We just need a few more days like today, and it'll compound.
Yeah,
today was a good day.
Well, also, there's not that many times we've had, as Tanner said, a rate cut into all-time highs. That was back in 2019-ish, right? In 2018, it was the opposite. We were rate hiking into a trade war. That's why 2018 was Q4 sucked so much. This is the opposite. And if you guys have read anything that China has been saying over the past 48 hours, they've been very friendly, like very amicable in terms of, now, hopefully the Xi meeting ends up leading to like some real deals, which could be very bullish for NVIDIA. We can finally get these chips to China. But I don't know, the bear case, October 10th wasn't a bear case. Trump and China beefing. I mean, it was the single biggest day for inflows in stock market history, as per Bank of America. So no one really felt that was bearish. Everyone was just like, all right, whatever. It's, we have to have a drawdown. I'm wondering, what is that actual structural bear argument? And again, it's just not the easiest to see given the data that we have right now.
Yeah, and like the China softening, it seemed like that came right around the same time where it was beginning to be public knowledge about trade deals in the region as well moving forward. Of course, rare earth agreements as well, or potential ones. And that's kind of why like April was so shocking. It was like trade war with everybody at the same time, which that doesn't work. And it worked out okay, but like this is a little bit different, where United States is like, okay, if you don't play ball, we'll figure it out. I think that we'll probably at least have one more head fake before they actually meet. Nothing's settled, but I don't know. That's a fun time to be in the market. And are you fully? I know that Tanner, you said that you're fully invested. I'm like very close, like 1% cash or something. Amit, are you fully invested?
I have like 2 to 3% right now. I used up a good chunk of this on buying this freaking SoFi shares. So Tanner better be right. We're going to talk about it. You too, Roy. You can't get away from it. This name is attached to you as well. So
yeah. No, I mean, we've been right. Like we were pounding the table when it was single digits. We talked to you about the loan platform business, and it's nice that the market actually appreciates and understands. Of course, it's moving after hours too. So
me and you have been friends for a long time. You know that my conviction on SoFi is not tied to the stock price. I mean, I don't know what they're going to do tomorrow, but I hope that fundamentally that they outperform.
And that's why I think people have enjoyed your content for the past 4 years, because you've been very consistent saying, I don't care about the stock. Now, you care about the stock, but you don't care. You care about the company's execution, and the stock usually catches up to it.
I care about the stock on the long term, but on a day-to-day basis, I mean, the market's going to do what it's going to do.
Yeah.
But you were talking about rate cuts. If you could bring up my screen really quick. You've probably already seen this tweet. Many of us have. But since 1980, the Fed had cut rates 20 times, while the S&P 500 was within 2% of its all-time highs. 100% of rate cuts since 1980 within the S&P at record highs led to more record highs 12 months later. 100% of times. Obviously, we're already seeing that, new highs. But do you think that that's going to continue? I mean, history says 100% of times that it's usually a good thing. And we're going to see continuous rate cuts. That was from the original rate cut. Now we're about to see two more. Original meaning September. Now we're going to see two more. Does that sort of reset the 100% rate cut clock, in order to see even higher highs after Wednesday, even higher highs after December 10th? When is it? December 10th? So I'm just, statistics say that we should be very bullish right now. But then, I mean, there's so many charts you can look at. Amit can bring up the Buffett indicator and then see why maybe we shouldn't be bullish. But that's the hard part about markets. That's why markets is not an easy game, is because there's 1,000 different data points, and you could look at 500 of them to point to bullish signs and 500 of them to point to bearish signs. And you have to, sort through the crap.
Yeah, the one thing that's like kind of in the back of my mind, it's not changing like the way that I'm investing, with being very light on cash right now. But if tariff woes are resolved, like they have an agreement with China and everything, market's going to pump. It's going to, might front run that as well. But I think that at that point, a lot of the other underlying cracks and issues, which some people have been noting, but by and large, the market has just completely ignored any bearishness except for tariffs. That's maybe when it starts looking at other issues as well. So government shutdown being the most pressing one, but there's several others out there too. So it could be that you'll start seeing headlines look very different if we have an agreement, and then there's a pullback after that continuous all-time high too. But I'm not trying to time it. I think that's a mistake a lot of people that are newer in the market, if you're not a trader, try to do. And it's I don't know if it's Buffett or Lynch. One of the old greats said, time in the market beats timing the market. And case in point today.
Yeah, I agree. And I would love for people in the chat to also give their perspective here. But doesn't everyone who is low on cash right now, AKA you're more fully invested than not, I mean, don't you feel over the past couple of weeks, it has been healthier to take advantage of the dip? It has not been a clown market. It has not been you're buying into crazy levels of FOMO or momentum. I know there's pockets of that are there in the market, but it just feels a little bit better after the 3 weeks of pain, right? You got to go through the pain to get the gains. And this S&P 500 move from 673 to 647 to 685 feels way healthier than 673 to 685. And if that just happened in a straight line up, without getting rid of some of the more fundamental structural issues, I don't think we would have been able to challenge our broader assumptions of this bull market. And again, the market set up really well for the companies that have executed on earnings to continue proving why they deserve a multiple. And if you don't prove it, you get your stock gets hit. And I think that's okay. So I don't know. I feel like I'm not buying into this crazy bull market all-time highs, and I'm scared with I'm happy to be very low on cash. And I think by the end of the year that should be a good decision as we keep going into it.
You got to have conviction on the things you believe in. And I've learned a lot of that from you, Amit. I just got to keep doubling down on the things that I believe in. And yeah, stocks tend to go higher over the long term. Not individually, it's definitely more certain whenever you group them in an index. But it is my belief that this game is one that, actually generates money. And I hope everyone listening to that believes that, or else you might be playing the wrong game. But yeah, I actually just bought SoFi today at $31 in after hours.
Bro, this guy's bullish.
All-time high. Hit the bid.
I was live, man. I had to. I was pressured.
Yeah, that's awesome. Love it. And honestly, like if SoFi was not the second largest position in my portfolio, I would probably be DCAing at this point. I would be DCAing at this point. I don't even need to say probably. So I did that with Robinhood. I messed up a little bit in the transition, but I'm like, hey, I'm gonna rectify. I'm just gonna DCA until I get the position sizing that I want. And I did, and it felt not great at the time, when it was like, okay, a year ago it was at $7 or $8, $9. Now I'm buying in the 60s and 70s. It feels pretty good right now, though.
Okay, so before we get into SoFi, let's cover a couple of these quick topics. So do you guys know what a closed-end fund is?
No.
Yes.
Okay, Tanner, please educate, because I have no idea. Well, what is this, and is this bullish for Robin and now listing 400 of them?
Well, I'm just seeing this news. So what is this? You can now invest in nearly 200 US listed closed-end funds on Robinhood.
Dude. I know SoFi earnings are tomorrow, but are you just not keeping up with any of the Robinhood update? Like, your freaking title of your live stream is like, "'Twas the night before SoFi." Like it's freaking Christmas. You're not caring about Robinhood at all. You just like
Vlad tweeted it. Have that on notifications. Pop it up anytime he says something. Come on.
This guy's fake, bro.
I didn't see it. I saw that. Did you guys see that they put out futures for UK customers?
Mm-hmm.
Okay, I didn't see that shit.
Yeah. That's what I mean. Get off X and actually go to their press releases one time. Okay, so I didn't see that. What it sounds, I don't know what the closed-end funds are, but essentially it just means that there's a certain amount of outstanding shares. That's all that means, that they're not recreating new shares. So essentially that for every, share that's outstanding, there needs to be a buyer of it. So if you end up putting money into that fund, new buyers drive the price up rather than them creating new shares in order to keep the price stable, like a stable coin, for example.
I'm not gonna lie, it's not because of your explanation, but I still have no clue what a closed-end.
My explanation sucks, but it just means that there's a certain amount. Like closed-end fund just means that there's a certain amount of outstanding shares, and that.
But are these like mutual funds, or like why are 400 of them coming on Robinhood? Like what's
at least the way that I know of it, a closed-end fund can be a mutual fund, but they're not mutually exclusive. There could be multiple different versions of what a closed-end fund is, but that can be Robinhood Ventures, that could be private equity, that could be like there's a ton of closed-end funds. It just means that there's a certain amount that they're not going to issue new shares. There's only a certain amount of shares outstanding. That's the closed part.
Okay. Well, 400,
as Curtis said, they won't dilute. It's just a certain amount of shares.
So this is at least I have like a very, very limited understanding of this. So releasing 400 of these, this isn't like oh man, this is amazing. This is like, oh, it's another nice ad. Is that how you would see it, Tanner? Or
well, I don't know what the funds are. So to me, this sounds like some version of they are adding mutual funds, but in Canada, we would say that you're adding 400 mutual funds. But to me, this sounds like a difference of the way, U.S. companies are wording it versus what I know, which is we wouldn't say, hey, these are closed-end funds for purchase. That's just like the characteristic of a certain fund. So to me, I don't even really know.
It's not a noun. It's almost like an adjective to an extent of what the fund is.
Like a fund can be a closed-end fund.
Right.
Okay.
Right.
Yeah, here's that other announcement, by the way. Robinhood launches futures. It's kind of interesting that we haven't seen ISAs and SIPs yet, unless I've missed those. I thought that they were supposed to come out this year. There's still some time left, but yeah.
Yeah, I don't think they fully have those yet. But look, futures trading is good. I do think UK customers want a lot of other things right now besides futures trading, but it is good to see that out there. Someone says, so here are you betting that the underlying assets of the fund, but on how the portfolio is being managed? That's my understanding of it as well. Like, to me, it's just mutual funds that are managed in a particular way. Like Vanguard, Fidelity, they have a lot of a lot of people don't leave those platforms to Robinhood because you can't transfer your funds because they're proprietary to those brokerages.
Closed-end funds are almost like, they're almost non-existent. I mean, for the most part, all the money is in open-end funds. If you want to go out and buy an index fund, for example, which is an open-end fund, you buy at the, QQQ or whatever, and then they take your money and go and buy those funds. Okay, yeah. They buy the underlying assets. But a closed-end fund is like, that fund will go up because there's more buying pressure than there is selling pressure. So they're actually really not common.
Yeah, that's fair. It's another asset to the platform, but it's not the biggest deal in the world. So you had that. You had Robinhood UK futures for customers, which was nice. And then the other final update is, look, banking is not officially out yet, but people are getting a preview of it. Some of you guys in the chat might have gotten a preview of banking. And from the pictures that we've seen, they're giving you a basically 3.75% APY if you set up direct deposit. So I guess the broader question here, Roy, we'll start with you, is do we think 2026, the big product outside of Cortex is going to be banking?
Probably not. That's still probably going to be predictions market. Banking is massive too. Of course, their continued international rollout of not just their trading suite, but also predictions market potentially. That's going to be significant. And knowing Robinhood, there's probably stuff that doesn't even exist yet that's going to be massive too. It's just a ridiculous company. So, but I would rank probably predictions market as a number one there for continued growth, at least as they continue to expand. That's massive.
Tanner, your thoughts on you think banking is going to be a game changer next year?
Yes, it's going to be a game changer. I just think the amount of new products and direct deposit and cross-sell and all the magical benefits that we saw from SoFi could be replicated at Robinhood. And then on top of that, I mean, they could go international with this and partner with those local banks there to custody the deposits. I just think banking is a big deal. What's a bigger? Well, actually, that's not a great comparison, but there is a lot of very big banking businesses versus brokerage businesses. Having both in one is a very good, combination.
Do you think it's a bigger deal next year as far as being accretive to revenue than predictions market? Or are you just saying long term, like it's a significant deal?
Oh, sorry. Maybe I didn't hear the. Yeah, no. Prediction markets might take it next year just because it already has significant demand and it's going to blow up. But over time, I think it'll also be hard to see the quality, like what banking means, because I don't think it's just the revenue. I think it's like, what does the stickiness of a user that's coming back to check their product every day? Like, how much more do they invest? How much more do they use their credit card? How much more do they use everything else if they bank there and check their app every day? Like, so it'll be hard to determine how much banking is putting on the business, but I think it's very important.
Yeah, I agree. Okay, last topic on Robinhood is prediction markets. First of all, I gotta get something to show you guys real quick, so I'll be back in a second. But Roy, I'm gonna throw this question to you. Do you feel any issue with prediction markets given the NBA scandal and the betting controversy, and ESPN is advertising with FanDuel, but then they're having to talk about this whole gambling controversy? Do you think it's any issue for the broader health of prediction markets, or College raising at $5 billion, Polymarket raising at $12 billion? No one cares. Everyone's just ready to continue this betting future that we're in.
Yeah, I think that there's some regulator clarification that's needed. The nice thing is most aspects of the Trump administration, I don't know about this, I can't remember the 4-letter acronym that they have for the betting side of things, but they actually, instead of enforcing and just slapping everybody with fines, they're actually doing a decent job, especially with crypto, but this is related to crypto, of saying, okay, these are the regulations and guidelines, and of course, bringing a lot of market leaders to the table. Kalshi it was a really smart partnership with Robinhood. And of course, maybe in hindsight, they should have bought him out or whatever. But given the connection, of course, to the Trump administration on the board of Kalshi, and some early success as it relates to some of those state-wide specific lawsuits, it's hard for me to see the predictions markets not doing well. In fact, of course, FanDuel and DraftKings are now shifted away from saying, hey, predictions markets are a joke, to we're not going to do them, to we're going to die.
And they have to buy a competitor to compete.
Yeah. So, I mean, and Robinhood, like the nice thing about Robinhood is, I'm not going to rehash the argument as far as like separate apps and stuff, but the money is already there. And it makes it so much easier. There's so much less friction when you're like, money's there, or margin if you're using margin. Be careful with margin, guys. But, you know, it's there. It's easy to use. So, yeah, this is blown up massively, and it's just here in the United States. There will be more competition. Anytime that there's a massive gold rush like this, there's a lot more competitors coming in. But it is hard to carve up market share, especially if your money is not already on the platform. So it's a layup, I think, for Robinhood.
Tanner, any thoughts on DraftKings having to basically acknowledge that they can't succeed without these prediction markets?
Yeah, I think it's going to be a massive. I mean, the stock has already taken a massive blow, but I just don't know the reason for using their traditional, like the I don't know the name of how, like the odds based betting. The spreads are extremely weird, non-transparent. You can't exit before they finish without some weird prompt to say, hey, do you want to take this and go? The prediction markets just work so much better. It's way cheaper. It's live in real time.
There's instant liquidity.
And there's zero limit to what this could be put on. I think prediction markets are going to be massively popular. Like, I think the way that, people talk about stable coins, like, oh, this market's going to 25x over the next few years. I think prediction markets are going to 25x over the next few years. Like, I think we're seeing the early days of what prediction markets mean. So I'm happy that Robinhood is getting in early.
I read a really fascinating article. I'll have to dig that up and send back to you guys. But one aspect that I also think tends to mean the predictions market's here to stay. Well, I guess two really is. You can see that it's being used as the source of truth a lot more so than polls when it relates to elections. And I think that is, there will be times when things are not correct, but the wisdom of the crowd has proven quite effective in that. And the other is, we're in the age of AI. And this piece that I'd read, I think it was Sean Taylor. Anyway, regardless, he said, in the age of AI, it's hard to determine what's actually real, what's accurate, what's not just AI slop that's reading AI slop and giving you answers that are not true. And so this, as a predictions market, has even more value. Vlad was saying this earlier, by the way, just because you can look at the wisdom of the crowd. It's not AIs or algorithms, at least yet here, betting or doing much of that. And so this is a valuable source of truth for a lot of people. I actually will look at that oftentimes. If I want to know how something might turn out, I'm tending to look at the predictions market an awful lot. So I actually like having that feature right there.
I do like it. And also just the way that these markets should work, especially for ones like Polymarket that are built on chain. That just means you can have one pool of liquidity that is completely global.
Yeah.
Like, it's the same bettors. If we're talking about any prediction or whatever, UFC to who's going to be on the Joe Rogan Experience or on the Amit show or whatever is in the future, from China to Russia to Canada to Mexico. That's a lot of trading, and just inherently, since the beginning of time, humans are gamblers. Like, we just freaking love it, dude. Since the beginning of time, gambling's a thing.
You're right. And the Kalshi guy was on a Citadel interview, and he basically said, like, people want to make a prediction out of everything, and that's only going to increase as people want other sources of truth. I mean, like, this market should be multi-billions of dollars of revenue over the next 10 years for Hood. They just got to keep expanding it. And they have added 800 prediction markets over the past, I think, 3 weeks. I mean, that was at like 200 back in September. So it's not like they're stopping on this as well. Okay, before we move on to SoFi, I do want to give a shout out to our boy Nate, who is an OG hoodie. He just sent me this today. This was from the summit.
Oh my God.
Nice.
It's so awesome, bro. It was a birthday gift, but also it was a present from him. I actually got to meet him in New York the other day because he came through.
Are you able
And
to
there's
say which
Nate.
one Nate is? Or
Yeah, Nate-
did he say not to?
I don't think he cares. He's public on Twitter. But Nate is all the way to the left, my left,
Yeah.
maybe other people's right. And then you got Chris, Roy, Tanner, myself, Davis, his friend, Josh, and then Kareem. So this is super cool. Super, super cool. Thank you to Nate for sending this. I will be hanging it up in the back at some point. So there you go. By the way, Nate, okay, this is actually a good segue going into SoFi. So I had dinner with Nate a week ago, and he's like hood forever. Like he is bulled up hood. So I said, well, what do you think about SoFi? And he was just like, dude, they are not going to even come close to doing what Robin, like he is so bearish on, and I tried to reason, but they're growing. He was like, but what are they doing? It's a bank. Like, what are they like? Why are people like, what's going on here? Like, they have no shot. So I think that's a good segue into SoFi tomorrow because look, I bought in. I'm excited for the earnings. I do think there's a shot for 35. Stocks at 31 overnight. I think we'll start off with you, Tanner. Why do you think there's a chance this company could really make a move tomorrow on earnings?
Why do I think SoFi?
I mean, it's up 112%. Why are people, dude, people are more excited for SoFi than NVIDIA earnings if you look on Twitter. Like, people are bulled up on this one.
I think that, yeah, I just think that there's not a segment of their business that's not primed to do well. If you go through the list, checking and savings, brokerage, credit cards, personal loans, student loans, home loans, the tech platform just signed 2 huge deals. What part of their business is not doing well? And it's not just SoFi inherent. It's like the industries are doing well. You know, personal loan lenders, home loan lenders, brokerages, credit card businesses, they're all doing well. SoFi's in every single one of them. So I don't think I'm not expecting.
Why is none of that priced in? I guess is the broader question.
Well, I think that there's just an inherent, fear of SoFi because it's a cyclical business. But if they end up putting up the growth that some Wall Street analysts are expecting, they're going to put up a 40% year-over-year growth rate at the highest margin that they've ever seen. That is crazy. Like 40% is not easy to put up, right? And that's coming off of the back of many quarters that have, oh, and by the way, on a really good comp. Last Q3 was really good. That was the first quarter that we saw the loan platform business. So it's 40% year-over-year growth, highest margin on a good comp, and it's accelerating their growth rate. Like Palantir, not at the same degree. Okay, this is baby. But if you start compounding growth rates more and more, faster and faster, you let Wall Street and retail investors you let their imaginations run wild about what they can do now that they actually have some tailwinds. So I think people are getting excited about Q4 because now they're putting up even higher downloads that could lead to potentially even a better quarter than Q3 in Q4. So people are pulling a little bit of that excitement into next year if we continue to see rate cuts. It just looks like going forward that they're going to continuously have quite a good time. I mean, Robinhood, very similar, right? Like if you're not expecting a slowdown, you're going to give them a premium for just continuous execution. They've never not triple beat. That's got to be worth something.
Hasn't been in the past, but yeah, this earnings is going to be special. We know, I mean, like eventually maybe they won't triple beat. This isn't going to be that earnings. We look at analyst expectations. They keep raising them. They're still too low. Last quarter, like Tanner said, it was against a weak comp. This time it's not. And we're right around 40% as far as our predictions for revenue growth. It's tough for the market didn't ignore it last quarter. It ran up, and of course they did that dilution immediately right after, which kind of killed the momentum, but it was not ignoring SoFi earnings, which was a big shift. This one, basically doing what they did last quarter again against a strong comp, is highly meaningful. What isn't priced in now? Rate cuts are probably priced in, or at least a good number of them. Banks have shifted from a banking charter, banking license being an actual drag on a business, or at least it was perceived that way for SoFi, that they were seen as less valuable because they obtained a banking license, which was the dumbest argument ever, but bears made that. We're like, oh, it should be trading at price to tangible book value, unlike before when they didn't have this. Like, okay, whatever. Not doing that anymore. People understand that. I'm a little bit more bearish on the tech platform than Tanner. But what's really not priced in, I think, is a loan platform business. We're entering an environment where they continue to have rate cut after rate cut as well. Demand is very high for these products. And other than with some very specific types of lending that SoFi doesn't even do, delinquencies seem fine. The consumer seems healthy. And now you're in an environment where like even Mr. Beast applied for a banking license. Like this is, you're seeing a lot of companies that said that they would never want a banking license apply. So as far as regulation, you've shifted all the way from seeing it as a liability to an excellent asset. Rate cuts are coming in, and they only really have the personal loans in the loan platform business. At any point, and I expect that they will in the future, they may even, this earnings as well, spin off additional products as there's demand on the loan platform business. There is a lot of growth that they can do, and that the nice thing is growth that's not capped as long as there's demand there. Like they're not capital constrained at all. So very well positioned over the next couple of years. It's at an all-time high. It doesn't feel crazy at all.
So 25 or 35, if you had to bet, if you had to make a prediction market. I mean, I'm betting 35. If I had to pick one.
Tomorrow or at the end of the year? Or
tomorrow.
35.
35.
Tanner wants to say 40. He's being
no. I think my prediction for tomorrow is 31.50. So I'm
really?
not.
Okay.
I think it'll be very
my
exciting.
prediction is 31.51. To be honest, it's funny that we ended up in the same ballpark. To be honest,
you know what's actually funny? I think that actually was my price target. It was 31.51 because Tevis's was 31.50. So we have the same.
I like 31.52. I'm upgrading my.
Mine is 33 just because multiples of 11. You have to do it with SoFi price targets. So
that would be a 10% move on earnings, which last quarter. So this is the problem. Last quarter, I think we were up 16 or 17% at one point, but then at the end of the day, it closed up 6. So we skyrocketed, and then throughout the day, there was a bunch of, profit taking. I don't know if this will be something like this, but yeah. And I wish I had prediction markets because the chance that they beat 8 cents of EPS, I don't know what it's at now on Polymarket, but earlier is like 80%. I watched whenever that market opened up and it was holding at 50. And I'm like, man, what an easy way for me to double my money. Currently, Wall Street actually changed their price target. It's now 9 cents. So Wall Street thinks they're going to beat this freaking Polymarket thing. And they're bearish on SoFi. So, like, I'm not incentivizing anyone to buy this. I just thought, for me, what a way to buy this. I was looking at it at 50%, but it's not open in my country. We don't really have the, Polymarket yet.
Also, remember, didn't last time they dilute on earnings?
Yeah.
That's what really messed up. Like, if we don't get any of that, maybe it's blue skies.
But that happened after close of the day. So that's not why the company got dragged down.
Gotcha.
I think it opened up red the next day because of that.
Gotcha.
And people are saying, hey, you know what? Are they going to dilute? I don't know. Maybe. The thing is, I'm not actually mad at, like, Noto needs $45 a share by next June. He's diluting himself too. I mean, if right now they think they can grow at 40%, and by diluting, they think they can accelerate that growth to 42 or 44%, like, who am I to judge? It's based on earnings per share. If you put more shares out there, you need to make sure that it is accretive to the total outstanding amount of shares. And that's what Noto believed last time.
And it was barely accretive, but it was. And here, if they do it again, it is. But just to add some context, Tanner, because there's not maybe as many SoFi shareholders, that 45 isn't just hit 45, it's his volume weighted average over 90 days. So he needs higher than 45. So if they dilute here, which they might, they'll use it and it'll be accretive. They're probably going to really open the floodgates for lending or use it for something to really try to get as many of those PSUs as they can. 35s is the next, well, really 25s they still need to get, but they're getting that. 35s is on the table, and then 45s after that.
But he needs to hold 45 for June of 26 for like 90 days from June 26.
So I think the earliest has to be by March.
Yeah, well, I mean, technically, you could have something crazy happen. Like this isn't going to happen, but hypothetically, if SoFi's trading at like $35, and it shoots to $100 for whatever reason, and there's actually volume for a number of days, that can skew it as well. But I mean,
the average needs to be above 45 by June 30th or something.
So by March, it has to minimum be 45, then hold it for 3 months, essentially.
Well, like Roy said, it doesn't have to be, but the average, like, so if we're sitting at 35, then it better start getting to 65 later on. So it really pumps up the average.
Yeah.
So hold on. That means that there needs to be a pretty big move in this stock for him to get paid. Like objectively, in 4 months, there has to be a big move.
Which is why
he doesn't get paid.
Which is why if they dilute, this is going to be the last one that they do, because it does have a short-term impact that's negative on the share price. And if Noto's like, hey, it's good for the company, but I'm going to lose out on a ridiculous amount of money and a number of my employees as well, I think he'll probably say, let's wait 6 months. We have cash already and we're ready to go. So,
all right, tomorrow's going to be fun.
It's definitely within the realm of possibility, as one of these comments says, that SoFi puts up great earnings and the stock does not follow. I mean, we've seen it countless times, but I'm a long-term investor. Eventually, that will be correlated to financials. Okay? Pick any company over a 10-year period. I mean, they track their fundamental performance.
Even PayPal?
PayPal, not so much, but it's a special. Talk to your brother about that. I mean, that's
gonna be fun. I mean, dude, what if PayPal?
Same day, by the way, same time.
Yeah, I'm actually kind of expecting, because I'm covering SoFi One Live. I did PayPal Live last time, but I'm like, SoFi I think is going to be the one that I need to be at. Last time I knew SoFi was going to be amazing. I think PayPal is going to be pretty much the same as what they reported in quarter two in terms of market reaction. There's a couple of potential wild cards there, but I think quarter four will be that quarter. But
wasn't it like down 7% or something?
PayPal on earnings?
Yeah,
last time. Yeah.
You think it's going to be the same?
No. I'm saying like what the market's wanting to see, which is branded acceleration, top line revenue acceleration as well. They're not going to see that. I mean, they'll see a little bit of that, but it's not going to be enough to really get excited. They don't have the full guidance that they'll be doing. There's a lot. I got my earnings preview out there. It's it's bullish, but last time it was a triple beat and it fell 7, 8, 9, 10%, and I was like, why? But so maybe the free cash flow changes things. The all-time high in acceleration of users, like that's the other thing that shifts. Maybe that changes things. A little bit of reacceleration of the top line as well. But I think quarter four is going to be the quarter. So this quarter I'll be with you guys with SoFi. Next quarter PayPal, because I think that's going to be the breakout. Not trying to time it. I'm just holding my position. But that's it. Wouldn't shock me though if this earnings, because we've been running SoFi into earnings. If we get a pullback, as some people take the profits, an initial pop, which is a normal pattern, and then a sell-off.
It could happen. Buy the rumor, sell the news.
And it doesn't bug me. I mean, we're at all-time highs. It falls back to 25. I'm like, oh man, I'm crushed. No. And if it does something really stupid, like, hey, it falls to $5, all right, I will just own SoFi then.
Okay, real quick question for you guys. Out of these 5 companies, Microsoft, Meta, Google, Amazon, Apple, 24-hour, the close of the day. Oh no, I guess they report after close. But next close, let's say the day after, who is having the best stock performance of those companies?
For Wednesday, or for Wednesday and Thursday?
Wednesday and Thursday. Microsoft, Meta, Google, Amazon, Apple. Their own, respective 24-hour periods?
I'll say Meta.
Cool.
Meta has consolidated for a good long while. I've not paid attention to it over the last 2 weeks, so maybe it's shifted a lot. But they've been building a lot. They're also positioned very well to benefit from the shifts that's happening in advertising. They begin to monetize WhatsApp as well. I wouldn't be surprised if they have a nice little pop in earnings. Google probably would be second for me, but
I think it's Google, but I'm going with Amazon because they've not made a move at all this year. I am feeling uneasy though, because if AWS doesn't do well, Amazon's going to get hit. There's just no way. It'll be a buy the dip, but everyone's got to be ready to see low 200s again if AWS doesn't do well. So I think it's Amazon or Google.
Could be Apple too, which is wild, but that refreshes. Is that yours?
I was thinking Apple potentially. I'm going to say Amazon, and then I was going to say Apple, but now you've changed my mind to Meta.
Yes.
So I'm going to say Amazon.
You changed your mind in 30 seconds, bro?
Well,
did you have any conviction at all on this? Or?
Because of the no, I kept my conviction. My conviction's Amazon. But
you just said you changed your mind on Meta.
No, I changed from second place from Apple to Meta. No, I'm Amazon. I'm still Amazon, holding Amazon. But Meta could do well because it hasn't moved much. I think there's a lot of good things from advertiser names. And
but Meta has moved this year. I mean, it's made a freaking 25% move.
Yeah. But I mean quarter to quarter here.
Well, yeah, that's right. It was at 800 on Q2 last time, so it's definitely
right. The only thing is that they could also be the worst performing one as well, because the stock is very. Mark Zuckerberg likes to spend money, and if they think that he's spending on the wrong thing, whether that's Horizon or something like this, that's not getting a return on invested capital, they could punish the stock. They've been punished before.
I hope they do, because I've been really waiting to buy a Meta dip, and I know 690 was like the upper, but like, I don't know, it just wasn't the most appealing. I want them to punish it, and I don't know if they punished it enough to take it into the low 600s. I think that would be too aggressive. But look, there's been a bit of internal chaos in Meta. I mean, the biggest thing from all these researchers that they've hired, which rumors are, $4 or $5 billion they spent, is a Sora competitor that no one uses. Like, really,
do you think
what
that's
else
working out at all? By the way,
Sora,
the hiring, the overhiring of the top names.
I think they have no choice, because the only relevance in advertising or in AI that Meta has shown is advertising. Llama, people say it's not a failure, but no one uses Llama. And then number two is the glasses are just not mainstream, and whatever AI version that can enhance the glasses, they had a chance to show it off. We watched the stream. It was horrendous. So like, where is Meta's AI moat coming from? It's advertising, which is great. The advertising is a great business, but I think they're struggling to figure out, like, where is our role in this artificial super intelligence world? And I don't think they have it yet.
What did you think about the Amazon glasses for delivery drivers? How cool of an idea is that? Oh, I'm kind of propping. I would be a terrible interviewer.
I actually didn't see that.
They're putting delivery driver glasses to help with direction, package delivery, and then also scanning boxes and taking pictures of the boxes as they've been delivered. So, like, proof of delivery.
Yeah, well, as long as like they don't have any weird things that oftentimes, with AR, you have dizziness or fatigue, or they're heavy. But if they don't have that, that sounds great.
They said that it cuts back. By the way, this is insane. It doesn't sound like a lot, but it says they cut back about 30 minutes of time saving per shift.
Wow.
That's an insane change. So I think they're pretty cool. And if Meta can be a part of that for not only, I mean, they probably won't do a lot of commercial use, but for retail use, I'm sure there's a lot of use cases.
Why have none of us said Microsoft?
I don't care about Microsoft.
Why do we always ignore Nadella, bro?
They're just boring, dude. They're just, I don't know. I think they're going to do amazing constantly, but I just find they do everything mediocre and nothing super great.
Well,
And that's not
Azure's
fun.
pretty good, right?
What?
It's not like Azure's been amazing.
Azure's
No.
been great. But that's recent. That's recent.
Yeah, it's kind of like Amazon is for me. I know you guys are on Amazon, but where I'm like, it's a good company. I mean, if somebody's saying otherwise, I don't know who they are, but I just see better opportunities out there. And versus like with Nvidia, I'm like, okay, I need to own a piece of this, and it's trading at a stupid valuation. With Microsoft, I've never actually felt compelled to buy, even though I'm like, hey, they're going to be around a long time. They're good, but I don't want to own like 30 different or 40 different companies. I want to own like 10. So it's hard for me to see them making that cut ever.
If you buy Microsoft, you own 20 or 40 companies.
Yeah. All right. So look, big tech earnings starts this week. All three of us will be covering it on our channels and Twitter. So if you're following us, you'll be updated on everything. I mean, this is going to be a wild week. Wednesday, we got JPow. Then we have big tech. Then Thursday, we have Amazon and Apple. And tomorrow we have GTC. So you got NVIDIA potentially sharing some new ideas and products. I mean, this is, and then as Tanner said, 40% of the S&P 500 reporting this week. So this is the week that determines what the next 2 months look like. And hopefully we get some good results going into the next couple of days.
I love earnings season. I hope it never goes to 6 months.
Yeah.
Dude, it's going to suck.
Canada's talking about it too now. They're like really pushing that.
Speaking of Canada.
No.
Do you know a company named Celestica?
I think I do.
What's
I can't think. I don't know. I feel like I do.
Do you know what they do?
No.
Bro, this stock is up 224%. It's up 10% after hours. They're a freaking hardware manufacturing supply chain electronics company from Toronto.
You say it like you're from Toronto. That's funny.
Bro, I'm from T-Dot. I love T-Dot. But
you can't pronounce the second T. That's how you know someone's from Toronto.
Yes, exactly. Why is a Canadian company up 250% this year? And why don't you know about it, given you're from Canada?
I only follow one Canadian company, and that's Shopify.
No, but that's an issue. Dude, this stock is up. We could have all been 2.5x richer if our Canadian friend told us that there was a Canadian company out there.
Can you imagine if every American company, I was like, how do you not know about this company? Like, what are you talking about?
The difference is Canada doesn't really have that many companies that actually like go up 2.5x in a year. But
I follow more companies from the Netherlands than I do Canada.
Dude, you have no Canadian pride, bro. You need to sing the national anthem or something one day. Like,
he might start singing the Star Spangled Banner instead.
Yeah. It just sounds better. Oh man, I'm gonna get locked up.
Yeah, I even if I wasn't a content creator, I would really not like the idea of going to 6 months. I know it can save, like actual CEOs, especially smaller companies, see this as a nice advantage and everything. But man, it's going to be a sad day if that happens.
Yeah. All right. Good stuff. Thank you, everybody, for being here. We'll be back next Monday. We got a lot of earnings. We're going to see how these earnings can play out, and hopefully we get some good results. We got rate cuts coming up. And yeah, I mean, look, this is a very, very important time in the markets as long as we can get some good results. I mean, the health of the S&P for the rest of the year basically depends on Wednesday and Thursday. I mean, everything else really doesn't matter. And then you have NVIDIA in a couple weeks, but Wednesday, Thursday are big days. We're probably going to get a rate cut. And if we can get that going in the right direction, then hopefully have a really fun end of year. All right. Thank you, everybody. Also, thank you for all the birthday wishes again. Really appreciate it. Thank you guys. I did not expect you guys to find the time out of your day on a busy Monday and hop on the stream. So shout out to Steve for organizing that. And I appreciate you. You guys really didn't have to do that. So that meant
it was the way I envisioned it in my head is that Steve would be like, yeah, and there's, just wanted to say happy birthday. And then like all of us would pop in the bar below, and then we'd all come on stream, and it'd be like, oh my gosh, everyone's here for me. But really, it was just I joined, and then it was kind of quiet, and then we were like,
Tanner, what's up? Hi, like, oh, Tanner, great.
But yeah, and then Chris joined like 30 minutes later.
Chris was like, hey, happy birthday! I'm getting on a flight. Talk to you later. I was like,
yeah. But happy birthday, brother. Honestly, you know, you're a big inspiration to me. I'm older than you, so I'm allowed to say this. I'm proud of you.
10 days
You know,
older.
I feel like what you've done has been awesome, and all of us here are following your journey, and you know, you're a trailblazer. So just really appreciate what you do. And yeah, next time you try to call me and want to have like a personal chat, don't call me at 6:59. This guy goes, hey man, like I just want to sit and talk for a minute. I saw your heartfelt, you know, message. I'm like, you're gonna make me late. I thought he was doing it on purpose. I thought he was messing with me.
No, I literally, I thought you streamed at 8, not 7, but I was like, oh, okay. So, yeah,
No, 7 o'clock.
I appreciate you guys. It means a lot. There's Roy's YouTube. You can follow him there for my channel. There's Tanner's YouTube. These guys will be live at like 7. Me and Steve are going to be live at like 7:30. So for those that want the SoFi analysis immediately, 6:55, 7 a.m. Eastern, make sure to check out their channels. And got a big day tomorrow. SoFi, UNH, and PayPal. So we'll keep it covering.
Big day.
Yeah.
All right. Thank you, everybody. Appreciate it. We'll see you guys tomorrow for SoFi earnings and the market open. Bye, everybody.
Bye for now.
Later.